Yeah, good morning, all traders out there, and let's start today. And we had lots of move on the indices yesterday, which was directional one side. So let's see now what market tells us at the current levels. Yeah, good morning. So before we start the session, let me read out the disclaimer part. So this is session is for educational and informational purpose and does not constitute any financial advice. So let's go into the session. Yesterday we had a strong move on the indices. So I'll go to my platform, and this is Nifty. See, remember that what we had seen is still we are not breaking the 20-day moving average on the downside, which is the middle Bollinger Band. Market does has a tendency to give a bounce or a pullback. So it was not a surprise, yes, but the percentage was a surprise. So now let's go and check. We follow the process. Let's see what the global markets are doing. So the headline says US stock futures steady as Fed minutes. So Fed minutes is there. Dow yesterday I would call 127 points mildly negative or mildly in minus right now. Yesterday the closing was absolutely flat for S&P, so was 3 points up. Nasdaq was in red. So let's go and have a look at what Asia is doing right now. So on the futures side, we can check the Asia. You go to investing.com in indices futures. So Bovespa is down. I guess yesterday Dow was closed. That's what I am getting the feel. I think some holiday was there. So yeah, nothing much change in the global market. So let's follow. So today we have a Nifty expiry, and this market has moved up. Once a market gives a sharp move, this is what we call a bullish engulfing candle. Yeah, it was a holiday day trader. So this is what we call a bullish engulfing candle, or in Western classical techniques, we call it as a perfect upward bar reversal, which means prices went below previous day's low, broke the previous day's high, and closed above the previous day's high. So that's a perfect upward bar reversal. On the resistance side, see, this gap is still going to be the resistance. So once you have a gap, the best way to mark a supply zone or a band or a resistance band is, see this gap, take this entire candle. So this is going to be my resistance for the day. Take a note of it, right? Which is approximately around 25,800 to 25,900. And after a sharp move, market can stall, pause, or trade sideways. If that's the case, then what's my support level for a day? I see from this is the low around the 20 DMA, and this is the previous candle's upper body. So all you have to do is mark this. So probably for a day or two, let's see how market behaves around this level. Clear, everybody? Give me a yes or a no. So the support is around 25,400 odd levels, resistance around 800 to 900. That's how the markets are poised today. And today is a weekly expiry. And in a weekly expiry, let's go and check where the OI distribution is. So for that, I go to my Stocko Incred Money platform. We have a full features of options, which is called Insta Options. I'll just log into Insta Options, and let me have a look at the options data on the Nifty side, as today we have an expiry. So on the OI side, this is the Bank Nifty. Let me bring in Nifty. So on the OI side, you see 25,700. That's the ATM straddle, guys. If you see the big towers out there is way up above here at 26,000. Again, if you remember last expiry, this level was in play. But before that, we have to come lower levels. And if you see between 25,800, the OI in the call is 1.04 crores. And the OI in the put at call at 25,900 is 98.44 lakhs. So what we see is our resistance 25,800 and 900. The data is matching with the OI buildup in the call. Getting it, everybody? So that's going to be the resistance for the day. If it crosses that, it will be a big surprise. But as market unfolds, you can take note of the momentum part of the market. So that's how Nifty is going to be today. And on the Bank Nifty side, yeah, you want to check Gift Nifty? I'll do that. So Gift Nifty is right now flat. Again, everything is around the middle Bollinger Band. I'm still calling this as a pullback and not an upswing. Why I'm calling it as a pullback and not an upswing? Because the last low was breached. And as per my Dow markings, once the last low is breached, the trend for me changes to sideways. Now I need fresh evidence for Nifty for a trend change on the upside. Sideways can either resolve in favor of buyers, we can have an uptrend, or a sideways can resolve in favor of sellers, we can have a downswing or a downtrend. Fine. Keep open both the possibilities. In between expiry day, you can trade the volatility, you can trade the spikes, and you can trade the choppiness. So Gift Nifty is right now showing it's minus 85, and see it's quite obvious for the markets to cool off after a big move. So it's not a surprise, it's flat. Keep always check the open interest part, friends. Combine your open interest with your spot data and then take those decisions, right? Now on the Bank Nifty side, the swing is up, the trend is up. Why I'm saying that? Because you see in this decline, Bank Nifty never went below the last low. Okay. And if you remember, we have been marking this itself as a support in Bank Nifty, which is at or around the 20-day moving average. 20-day moving average is something which as a short-term trader, you should always be aware of it, specifically when prices are crisscrossing the average. So it took support around the 20 DMA plus this, but it has closed above this high. Sometimes after such a big bar, market can pause or extend a bit, but always remember that any up move in Bank Nifty till this level, which is 60,300, or this day's open 60,400, put a line over there. This will keep you in check if you become strongly bullish. So over here around 61,324 is a good resistance level for Bank Nifty in context of if it getting overbought. And see, after such a big rise, we can't have any support levels which are midway. If you want, then we have to go to our 60 minutes charts. From today, we'll start analyzing 60 minutes charts. On a 60 minutes, market has given this breakout. It's close to this high. And see where those breakouts happen. This was the breakout level, if you remember, yesterday. But it's two way up high on location. So be aware of this level. On a 60 minutes, there is a small little pause or a red candle. And always remember that in context of a pause, that pause itself becomes your support level. So now Bank Nifty, I wouldn't take yesterday's low. I would stop for today's trading and mark my support level around 60,500, which is 350-400 points away from the current levels. And resistance continues to remain at 61,300 to 400 range. Always take a note of a pause, friends, on a 60 minutes. See, yesterday also when market dipped down, where did it pause? At this low, and it bounced from there, or I would rather say there was a rally from there. So as a trader, from the daily price charts, which is your broad plan, your macro plan for a trader, go to your trade initiation plan, and your trade initiation plan for a day trading or a day or two always goes into your hourly charts. Post that we'll also go to lower time frame like a 15 minutes chart, but as of now we will stick to daily and 60 minutes. So if you are aware of this, you could have caught this low yesterday with a risk management in place. So that's how Nifty is positioned, right? And we always check the VIX index, which is India VIX. India VIX, if I go to daily, there was a spike in volatility, which again is bringing back VIX to around this level, right? So that day's dip did make the VIX go up, but if you see VIX more or less, it's now stuck in a band, which means you will see choppiness. You will see those dips, 1,000 points in Nifty rise off from the lows, and the gyrations will continue. Right? That's what VIX is showing. A sharp band was consolidation was breached on the upside, and VIX has come back to this level around here. So VIX is likely to stay in this band. Let's see which side it breaks. That will give us a strong sense of direction of what the options data is telling us, because the construction of VIX is taking into account the options data, the call and the put, right? So VIX is still in a range. So in between, you will see markets also in a range. Once you see market in a range, friends, the study which you should rely upon is Bollinger Bands. Middle band is your fulcrum point. I'll go back to, let's say, Nifty. Your middle band is your fulcrum point, which means if it pauses, halts there for a upside. So these are the three bands of the Bollinger Band, right? And overbought and oversold are within the upper end of the band, upper and lower end of the band. So markets right now is not doing anything in context of a positional or a larger time frame. In the shorter term time frame, it is giving lots of trading opportunities by getting overbought at upper band, cooling off at the middle band, retracing to the middle band, coming back to the lower band. So make sure the Bollinger Band along with support and resistance plus UI data are the three dominant studies which as a trader you should be applying right now, right? And remember, studies are not constant, studies are based on market conditions. Right now market conditions are sideways. So in a sideways market, support, resistance, Bollinger Bands, and your OI data are the three decision-making tools which a trader should have with him. And as far as the PCR is concerned, if you see in the Nifty also, there is more OI in the put side than in the call side. So I think it's a pause or intraday dips should find support. There's a heavy OI buildup in the call side, put side, sorry, see the towers. And if you ask me, the expiry part 26,000 is the call and 25,500 the put. Somewhere midway, we are going to see markets. That's what the PCR tells us, which is around 1.07. So there is more OI build up in put, which provides market some amount of cushion on intraday dips. And on the bank Nifty side, yeah, I'm using my platform, which is Stocko Incred Money Insta Options. Again, in the bank Nifty side, OI in the put is 1.58 crores and call is 1.39 crores. So by this tells that the PCR is more than 1. So if I go to my PCR put call ratio, it is around 1.17. Right. So that's markets fine, can take a stall, pause or a breather at or around the current levels and be aware of it. And if anybody wants to learn more about options trading, so today we are having a webinar from 4:30 to 5:30 on directional hedge strategies, which is called bull spread and bull call spread and bear put spread. So I'll be doing this webinar in which we will see in detail understanding about the directional hedged option strategies. So if you want to register, I'll just put in the link over here. It's from 4:30 to 5:30. So we'll all again meet around that same time, and in the evening also we will have the post market close at around 345. So that's all from my side, friends. Thanks and have a nice day.